So the first thing we need to do is create a list of companies. What we found different from the first go around of 7-day stocks was that we had them go through news sources and find hot topics, hot stocks, and then come up that way. The problem with that is that we saw that more people had success when they were dealing with stocks they already or companies they're already familiar with. So come up with a list about 5 to 10 companies you're familiar with, and then find the tickers of these companies using Google Finance. So what I did is I just looked around the room here and came up with a couple stocks or companies that I knew. The idea is just to get a group of stocks that we can research. So if you don't know the ticker symbol already, what you need to do is go to Google Finance. So up here, the search bar, just put in Hewlett Packard. See right here, we see right here. Hewlett Packard is HPQ. Don't worry about the first part. The first part just says the exchange is trading on. So this is trading on the New York Stock Exchange. But the ticker symbol is HPQ. So now we must do our research. The most simplest way though, obviously with no background or knowledge of stock trading, is to use a charting platform to first note the price range of the stock over a given period. How much does the stock move? If a stock only moves in a 10-point range over a year, what's the odds it's going to move more than a couple points, if even, over a couple months? And then you can find related news using FinWiz, and then we're going to use Twitter or StockTwits to get investor sentiment. What are people saying about the stock? We'll go through this researching example real quick. So what we'll do is we'll go to FinWiz, and right here at the top we'll put in our ticker symbol, HPQ, and you see we get a result of a lot of information. We first have a year-long chart. We have a lot of financial information, which some of you may know, some of you may not know at this time. We have price targets. This last November 24th, 09 was the last one. They reiterated a buy with a price target of 58 to 62. The price right now is at 48. Looking at the chart, we see that this is like a 30-point or 20-point price range, which is not bad. You see the stock has gone up a whole lot from its bottom, and it's also come down a little bit. So we're not buying the stock at its peak, which is a good idea. You see it's kind of came down and it's bounced up. That's another good sign. So there's a lot of good signs, and then we combine that with the news. We can read the news, see what people are saying about it. So we take that, we kind of soak in all the knowledge we can about the stock. And now what we need to do is go to Twitter. And you may or may not know, there are a lot of stock traders on Twitter. It's not just used for pointless ramblings. People with a lot of money and a lot of good traders trade on Twitter. And what they do basically is they put ticker symbols or a dollar sign in front of the ticker symbol. So in this case, the ticker symbol is SPWRA, and they put a dollar sign in front of it. And the reason they do that is because there's a site called StockTwits.com. There are a couple other sites, but basically what they all do is they find, they go out and search for dollar sign, like a ticker symbol with a dollar sign in between or before it, and then like something like this will get all these type of posts, Twitter posts will get fed into the StockTwits stream. So all you have to do is go to StockTwits.com and you just get a bunch of financial stock related Twitter posts. So you can go check out. You can go directly to StockTwits if you want. But if you already know what we're looking for, you can just go over here to the search bar. Remember, we're doing Hewlett Packard HPQ. So put the dollar sign in front, HPQ. Search, and you'll see we'll get the latest results for people who talked about Hewlett Packard. A lot of times you'll see there'll be some charts, there'll be some articles, there'll be just opinion on people what people think about it, and so forth. And the idea here is just to get an overall feel for what investors are thinking about the stock, and then also this is a good way of trying to see what other investors are doing to analyze the stock. It'll give you good insight to different trading techniques and so forth. Now, you don't want to necessarily believe what everyone says on here, but you can pick and choose. And since we've already done the research first, it can give you a better idea to which way you want to follow. So during this time, we'll reject some stocks from the list. The idea is we don't want to keep everything, but we want to kind of narrow down a list, but still keep track of the others. Continue following them, and this leads into the next step. Record your judgment. So every trader should have a trading journal. This could just be a simple notebook, scratch paper, some sort of spreadsheet online, whatever it is. You just need to keep a place where you're jotting down, the records of the stocks you've been following. You want to note down the current price, the date, what direction you think the stock price will go, and why. And then continue to track the stocks before and after you find the results. So, I'm probably most known for trading the same stocks over and over again. And the reason I do that is because if you continue to follow a stock and become more and more familiar with it, then you understand what really makes it move. I followed like some stocks for over 2 to 3 years, and I know what time of the year they're gonna do the best. I know what third party or other complementary aspects need to be in place for the stock to move. I know how they react to different events. The more you follow a stock, even if you're not going to trade it, even if it's at like a low point and you're not going to even trade it for a while, the more you follow it, the more you understand what's going to happen. So if you combine that with the fact that we use companies we already know, we know companies that are doing business we already know. If you don't know anything about medicine, but like for example, we have Pfizer. You probably know about all the different medicines or over-the-counter medicine they have, but do you really know about medicine? Do you know about how these things are? What's the process that it must take to get approved? If you don't know all about all that, then you probably don't want to deal with anything with medicine. So you want to deal with companies you know what they do. You know the business. Not you not necessarily don't have to know every single thing about it, but you know what they do and kind of a good idea of what the business itself. So you want to continue to track the stocks before and after. So the idea is to find out what makes your stock move and get a feel for what works overall. By keeping a journal, we can trace our progress and learn from our mistakes, and that is really the bottom line. A couple of notes to remember is that for every stock, you should have an entry, an exit, or otherwise price target, and a stop for every trade. And in this case, the entry would be the price that you want the stock to hit before you enter. You don't ever just want to enter into the stock. You want to always be confirmed into something. So even if that's just like 2 cents higher, you want some sort of confirmation that lets you know, okay, buy the stock now. Rarely ever will you just go in and say, okay, buy. The exit price is your price target. At what point can you say, okay, yes, the stock is done, I'm satisfied, and get out. If you don't do that, a lot of times what happens, you'll end up holding too long. You'll say, hey, this has gone up already, I'll hold a little bit longer, see if it goes more and more. Then it starts coming back down, you're like, no, it's just a little, and then it goes down more and more and more. It happened to me before. So you always want a price target, some spot where it hits this point and you're fine. And then a stop for every trade. This is a price that you consider where the stock was a failure. So it's usually a price below where you buy it. As the stock goes up, you can increase that stop price. So, for example, if you buy a stock and the stock goes up, then you can move that stop price to whatever the price was that you bought it at. But basically, that price is where you feel the stock is dead, the trade's over, and done. And using these tools and resources and basically the method I've taught you, you can and will make some profitable trades. The hardest part now is to get over the fear, just execute the trade. I guarantee you it'll be one of the most powerful feelings you have ever felt. I mean, just think you're using maybe a couple hundred or even a couple $1,000s, and you're really buying part of a company. I mean, necessarily it's a fraction of the company, and you have no say really whatsoever. But hey, for a second, you own that company. And from here, what you need to do is A, go to your stockbroker and execute the trade. And 2, if you're really not comfortable, then consider trying to ease yourself even more by signing up for like a free virtual trading platform. One I recommend is Wall Street Survivor. Again, the link is down below. It is a free virtual online trading system, and basically you're given, I think, $100,000 in fake cash. You can obviously use as much as you want, and you can execute trades everything has for real. You can even do options trading. Execute all the trades you want, and you'll get all the same results. Only thing that's all fake money. Nothing's real. And so this is a very basic way and yet a very practical way of how to trade stocks. But there is an easier way. Continue reading the report and actually watch the next video, and I will show you that way.